Okay, so we'll go over to the ULTY drip since March. So when you put $10,000 into ULTY and the ETF price on the day of March 1st was $6.70, you were able to purchase 1,492 shares of ULTY. The first dividend still was the big one. That did come back at 46 cents, and you were able to then purchase an extra 103 shares. When this started weekly, we saw what the dividends did come back. They're going to be hanging out around 9 to 11 cents, and you'll see that since March, the NAV, or the NAV for ULTY, has been hovering around $6. So it seems to have stabilized quite a bit. The dividends also have stabilized quite a bit, right around 9 to 11 cents. But since March, this has actually been quite a significant increase in your total return. So through the month of March, you were able to purchase another 200 shares, roughly, and makes your value go up quite a bit. It was up to 5.35% of a total return in March. And then when you go through the month of April, same thing. It's hanging out between, this is down to close to 9 cents a share, 0.836 to 916 cents per share. You're getting a roughly a $145 to $160 dividend each week based on your $10,000 investment. You're still continuing to drip those dividends into buying new shares of ULTY, which is increasing your total shares fairly quickly. And then you'll see the total return begin to pick up pretty good here shortly, because the more shares that you get, the more that 9 cents per share makes a difference. Doesn't seem like a 9 cent per share is a big deal, but when you have 2,000 to 3,000 shares of ULTY, you're getting $218 per week. So you can imagine if you have anywhere, 10 to 20,000 total shares of ULTY, you're going to be getting anywhere from $1,000 to $2,000 a week. And if you continue to drip that in, that's going to continue to increase and increase and increase. So after not after a year, so since March, you are going to have a total dividend of $4,486, with your total value of ULTY going up $3,373 since you put your original $10,000 investment in. So a total rate of return of 33.74%. So this just really shows you the value of dripping your dividends in. I feel that this is a great way to really increase the number of stock that you have in this ETF, as well as increasing the value of it significantly. However, once you get to a certain point, or once you are needing to begin to use the dividends, then you just turn the drip off and then you start taking the money. The biggest thing to remember with this, if you do not have this in your 401k or a Roth, you are going to need to pay taxes on this. So that's going to be, think of what your tax bracket is. So take a 27 to 32%, up to 37% if you're in the highest tax bracket. Roughly take a third of what you're making each week, put that in a separate account for when the tax man calls. That way you're not left high and dry on April 15th. All right, so that was using ULTY and dripping it for 1 year as compared with since March when they made the change. Next up, I'm going to go over ULTY with no drip, and that'll be the next video I make. Once again, like last time, if you guys have any questions about anything, feel free to leave a comment on this. Spread this word around. I feel that these yieldmax funds are amazing funds for getting high dividends. Granted, they are very high risk, but there is a possibility of getting some very big returns on this if you play your cards right. Thanks a lot, and see you guys next time.